traders, welcome to the Inventor Strategy Selection channel. Remember that feeling of staring at the screen? Heart racing, afraid of missing a market move? In this ever-changing financial ocean, we often struggle through the fog of signals. Prices fluctuate like a roller coaster, indicators contradict each other, and every decision feels like walking on a knife edge. This feeling is even stronger when we shorten our trading time frame to minutes. Today, I want to share a useful short-term strategy with you. The comprehensive trend capture and short-term trading strategy, or as we might call it more familiarly, the scalping strategy. Simply put, scalping involves frequent trading in extremely short time frames, making small profits that add up over time. It is like catching small shrimp all day. You can still fill a bucket by the end. Unlike trend trading that waits for the wind or medium to long-term positions that wait for big moves, scalping is about taking quick action, getting in and out fast, trading every few minutes, and slicing off small profits with rhythm and execution. The strategy I am introducing today is a type of scalping system, not some fancy complicated system, but a practical tool that helps you establish order in rapid-fire trades. Compared to traditional daily time frame trading, this approach allows us to find certainty in small intraday movements, helping us find direction in chaotic markets. This strategy essentially integrates four key dimensions of technical analysis: trend, momentum, volatility, and directionality, forming a trading framework called the scalping system. Imagine standing in front of a chart with market noise blasting in your ears. How do you find direction? This strategy acts like an experienced trading mentor, using moving average crossovers to indicate general direction, RSI to filter out meaningless false breakouts, ADX to tell you if a trend is strong enough to follow, and finally ATR to customize your stop loss and take profit levels. The design purpose of this system is to solve the most headache-inducing problem in day trading: too many signals to choose from. In oscillating short-term periods, it keeps you restrained, but when a trend forms, it gives you the courage to enter promptly. Unlike simple systems that only look at one or two indicators, what makes this strategy different is its multiple confirmation mechanism, like adding double insurance to your trading decisions, allowing you to both capture opportunities and protect your capital in ultra-short-term trading. Talk is cheap, show me the code. These parameters have been repeatedly tested by professional traders in real trading, not just randomly decided. The moving averages use 9 and 21 periods, derived from the Fibonacci sequence, almost a golden combination on intraday charts. The developer initially tried 7 and 14 but found signals too frequent, nearly hourly trading, while 15 and 30 missed optimal entry points. RSI uses the traditional 14-period setting with 70 and 30 overbought and oversold thresholds. ATR is also set to 14 periods, with stop loss at 1.5 times ATR, and take profit at 2.0 times ATR, creating a 1 to 1.33 risk-reward ratio. ADX also uses 14 periods, with a threshold of 20 based on experience. Below this value, trends are usually unclear. Above it, there is enough confidence to follow the trend. This code builds the technical core indicators of the scalping strategy, with each line carefully thought out. First, the EMA indicators. The fast period EMA captures the latest price movements in the short time frame, while the slow period EMA provides a smoother medium-term perspective. When these two lines cross on the chart, they often signal a short-term trend reversal, perfect for the quick in-and-out scalping style. Next is the RSI indicator, which, in rapid trading periods, helps filter false signals and precisely identifies short-term overbought and oversold areas. Users have reported that without RSI filtering, some hit 3 consecutive false breakouts, reducing their account by 4%. The ATR indicator was added after experiencing several unreasonable stop-loss placements, as fixed-point stops often do not suit actual market volatility in scalping trades. Finally, ADX and its directional indicators complete the system, telling us if a trend is strong enough to risk a trade in such a short time frame. These four indicator groups do not simply stack, but form a precisely coordinated whole. EMA shows direction, RSI prevents buying high or selling low, ADX confirms trend strength, and ATR helps reasonably control risk. This multi-layered confirmation helps build multiple moats, improving strategy win rates while ensuring capital safety. This code defines the core trading conditions of the scalping strategy, the strategy's soul. Long conditions require 3 key factors simultaneously: fast EMA crossing above slow EMA, which often means short-term strength is increasing on the chart, RSI below the overbought threshold, ensuring we are not entering when the market is too excited, and ADX greater than 20, verifying the trend is strong enough to support a short-term trade. Short conditions follow completely symmetrical logic. This triple confirmation mechanism seems strict but is especially necessary in rapid timeframes where false signals are common. Some traders have tried trading with just moving average crossovers and saw their accounts continuously shrink in choppy markets. The stop loss and take profit settings are the result of repeated experiments using an ATR-based dynamic mechanism rather than fixed points. In scalping, this is crucial. When market volatility increases, ATR expands and stop-loss widens to avoid being shaken out by short-term fluctuations. When markets are calm, ATR contracts and stop-loss tightens, allowing more precise risk control, especially in short time frames. Risk control is more important than predicting direction, because no one can be certain how the next candle will move, but we can decide how much we are willing to lose. Small win rate advantages will eventually bring the goddess of victory's favor. This code is the key step that transforms the scalping strategy from theory into actual action. When long conditions are met, and there is no current position, the system immediately executes a long entry, while setting dynamic stop-loss and take profit. In short-term trading, this seamless execution is crucial, because market conditions change quickly, and hesitation can cause the best entry point to slip away. The strategy uses a single position mechanism, not entering again while already holding a position, which makes perfect sense in scalping where our goal is to catch short-term movements rather than accumulate large positions. Besides regular take profit and stop loss, the strategy adds RSI-based auxiliary exit conditions. When RSI enters the overbought area, and we hold a long position, the system actively closes the position, even if the preset take profit target has not been reached. Similarly, when RSI enters the oversold area while holding a short position, it also closes. This double insurance mechanism is particularly valuable in scalping, because market sentiment changes rapidly in short time frames, and taking profits promptly is often wiser than stubbornly waiting for target levels. One trader shared an experience where the price was just a few points from the take profit level, but RSI already showed overbought conditions, so the system decisively closed the position, and the price immediately fell sharply afterward. If they had stubbornly waited for the take profit to trigger, a profit could have turned into a loss. In rapid trading environments, markets often do not have enough time to fully develop trends, so flexible exit strategies are more practical than rigid target prices. This code transforms the strategy's abstract logic into intuitive visual elements, crucial for real-time trading. Moving averages use blue and red contrast, making crossover points obvious. Trade signals are marked with triangles, differentiated by position and color for long and short directions. The strategy features 3 separate indicator panels. The RSI panel marks critical 70 and 30 threshold lines. The ADX panel highlights the 20 strong or weak dividing line, and the ATR panel visually displays market volatility changes. Finally, the alert settings help us strengthen real-time trading information reception. With long-term use of this visualization system, you will find yourself becoming increasingly sensitive to patterns on charts, even anticipating possible trading opportunities before indicators signal them. This intuition does not come from nowhere but develops through repeatedly observing the interaction of these visual elements, forming pattern recognition abilities in your brain. Practical traders' experience shows this scalping strategy performs very differently in various market environments. In strong bull markets with one-sided uptrends, the strategy performs exceptionally well, as the EMA fast line frequently crosses above the slow line, while ADX remains high, generating continuous long signals. Some traders have caught 5 consecutive rises in an uptrend, each time holding for just short periods before taking profits. The same applies to bear markets, where the strategy can capture downtrends and profit from short positions. However, choppy markets are this strategy's Achilles heel. When prices oscillate within a range, EMAs cross frequently, and even with RSI and ADX filtering, some false signals may still occur, leading to consecutive small losses. Regarding parameter adjustments, different instruments may need fine-tuning on short time frames. For altcoins with higher volatility, RSI might need to be set at 75 and 25 for overbought and oversold thresholds, while less volatile mainstream coins might be better suited to the traditional 70 and 30 settings. The same applies to ATR multipliers. High volatility markets might need 2 times ATR for stop losses, while 1.5 times is enough for low volatility markets. A frequently discussed trading dilemma is, when ADX is very high, like above 35, but RSI is approaching overbought, like 65, should you enter? The strategy itself allows this entry, but experienced traders will judge based on current market sentiment and previous high positions, usually reducing position size to half to prepare for possible short-term pullbacks. After hundreds of hours of real trading verification, many traders have gained a deep understanding of this scalping strategy. First, regarding strategy completeness, it integrates 4 major elements: trend, momentum, strength, and risk, forming a relatively complete short-term trading system. However, an obvious flaw is the lack of volume confirmation, which in low liquidity periods might lead to false breakouts with insufficient trading volume. Risk management is this strategy's biggest highlight, with the ATR dynamic stop-loss and take-profit mechanism particularly suitable for the highly volatile short periods, while the RSI conditional exit provides an additional safety net. But to be fair, fixed ATR multipliers are sometimes not flexible enough. Ideally, these multipliers would adjust dynamically based on market conditions. In terms of adaptability, the strategy performs excellently in clear trending periods, but will frequently signal and produce consecutive small losses when markets move sideways. Statistics show a win rate of only about 40% in choppy markets, but over 70% in trending markets. The strategy logic is clear and intuitive, which is what initially attracted many traders, making it easy for even novice traders to quickly understand and apply. Innovation is definitely not this strategy's strong suit, as it basically uses a combination of classic technical indicators without particularly novel concepts. But sometimes simple combinations are more practical. As Einstein said, everything should be made as simple as possible, but not simpler. In terms of practicality, the strategy is simple to operate with clear signals, few parameters that are easy to optimize, and is especially suitable for investors doing rapid scalping trades. Overall, this is a well-balanced scalping strategy particularly suitable for investors who already understand basic technical analysis and hope to achieve success in short-term trading. I look forward to everyone continuously improving it in practice. If you have any improvement ideas, feel free to share in the comments. Maybe your small adjustment could take the strategy to the next level.